Listen, I don't care if you're making money on Reddit stock right now. I don't care if every analyst on Wall Street is telling you it's the next big thing. What I care about is whether you're about to make the biggest mistake of your investment life. I'm Kevin O'Leary, and I've built a $400 million fortune by following one fundamental rule: never fall in love with a stock when the math doesn't work. Reddit is trading at over 100 times earnings right now. 100 times. You know what that means? It means the market has priced in perfection, and perfection never happens. But before I tell you exactly why Reddit is a trap, you need to understand what's really going on behind those explosive revenue numbers everyone's celebrating. Let me hit you with some cold, hard numbers that Wall Street doesn't want you to focus on. Reddit closed at $229.87 on December 31st, 2025. The stock has a price-to-earnings ratio of 124.39. Let me repeat that. 124 times earnings. You know what that PE ratio tells me? It tells me that investors are paying $124 for every single dollar of profit Reddit generates. Now, some of you are thinking, Kevin, high-growth companies always have high PE ratios. And you're right. Amazon had a high PE ratio. Netflix had a high PE ratio. But here's what you're missing. Those companies had clear paths to dominating their industries. They had moats. They had pricing power. Reddit has none of that. According to Simply Wall Street's analysis, Reddit is overvalued by 120% based on discounted cash flow analysis. 120%. That means if you buy Reddit stock today, you're paying more than double what the company is actually worth based on its future cash flows. That's not investing. That's gambling. And I don't gamble with my money. Let's talk about the PEG-E ratio, because this is where it gets really ugly. Reddit's PEG-E ratio is 2.57. Anything above 1.0 suggests a company is overvalued relative to its growth rate. At 2.57, Reddit is massively overvalued. The growth rate simply cannot justify the valuation. Period. Here's another metric that should terrify you. Reddit's enterprise value to EBITDA ratio is 151.5 times. 151 times. That means you're paying $151 for every dollar of earnings before interest, taxes, depreciation, and amortization. Show me any investment professional who thinks that's a good deal, and I'll show you someone who's going to lose their clients' money. But Kevin, you might say, Reddit is growing fast. They grew revenue 68% year over year in Q3 2025. True, but here's the problem with that argument. Fast growth doesn't mean anything if you're overpaying for it, and at these valuations, you are dramatically overpaying. The market has already priced in years of perfect execution, zero competition, and no economic headwinds. That's a fantasy, and I don't invest in fantasies. Now, let me tell you about Reddit's dirty little secret that nobody wants to talk about. This company is almost entirely dependent on advertising revenue. And that, my friends, is a massive problem heading into 2026. In Q3 2025, Reddit generated $585 million in revenue. Want to guess how much of that came from advertising? The vast majority. This isn't a diversified business model. This is a one-trick pony. And when that one trick stops working, the stock is going to crater. Here's why advertising dependency is so dangerous. Advertising spending is the first thing companies cut when the economy slows down. We're heading into 2026 with tariff concerns on the minds of customers, according to Reddit's own management. Low visibility in the market, potential recession risks. When CFOs start tightening their belts, where do you think that advertising budget is going to go? Straight to zero. But it gets worse. Reddit faces an existential threat from AI-powered search. Google's zero-click search algorithm is already diverting traffic away from Reddit. According to analysis from AI Invest, Reddit could lose up to 50% of its search-driven user base because of AI overviews. 50%. When users can get answers directly from ChatGPT or Google's AI search without ever clicking through to Reddit, what happens to Reddit's traffic? It disappears. And when traffic disappears, advertising revenue disappears. Reddit has a dangerous dependency on Google for SEO traffic. One analyst called this an existential risk. If Google decides to change how it surfaces Reddit content, or if AI search tools bypass Reddit entirely, this company's growth story falls apart overnight. You're betting on Google's continued generosity. That's not a bet I'm willing to make. Let me give you another red flag. Reddit management admitted that logged out user growth is decelerating. Logged out users are critical for advertising revenue because they represent the scalable audience. When logged out user growth slows, advertising revenue growth slows. And when advertising revenue growth slows at a company trading at 124 times earnings, the stock gets destroyed. The advertising market is also becoming increasingly competitive. TikTok, Meta, YouTube, Snapchat, and now even LinkedIn are all fighting for the same advertising dollars. Reddit is a tiny player in this space. They don't have Meta's targeting capabilities. They don't have TikTok's engagement. They don't have YouTube's video dominance. They're competing with giants and they're losing. Now let's talk about profitability, because this is where Reddit's story really starts to crack. Yes, Reddit reported GAAP profitability in Q3 2025 with net income of $163 million. Congratulations. But let me show you what's hiding beneath those numbers. Reddit's net margin was 28% in Q3. Sounds great, right? But here's what they're not telling you. Stock-based compensation represented 16% of revenue in that same quarter. 16%. That means they're diluting shareholders at an alarming rate to keep employees happy and costs down. When you're paying your employees with stock instead of cash, you're transferring wealth from shareholders to employees. That's a hidden cost that doesn't show up in net income. Let's talk about free cash flow, because that's real money. Reddit generated $183 million in operating cash flow in Q3 with a free cash flow margin of 31%. Over the trailing 12 months, they generated $500 million in free cash flow. That sounds impressive until you realize they're sitting on $2.2 billion in cash. Why do they need that much cash? Because they know their business model is fragile. They're hoarding cash for the inevitable downturn. Here's another problem. Reddit's gross margin is 91%. That's actually quite good. But gross margin doesn't tell you anything about the sustainability of the business. High gross margins just mean their incremental costs are low. It doesn't mean they can maintain pricing power or defend against competition. Reddit's adjusted EBITDA margin hit 40% in Q3 with an incremental adjusted EBITDA margin of 60%. Management loves to talk about these metrics because they make the company look more profitable than it actually is. But EBITDA is a misleading metric. It excludes interest, taxes, depreciation, and amortization. Those are real costs. When you add them back in, profitability looks a lot less impressive. The bigger issue is sustainability. Reddit's profitability depends entirely on continued revenue growth and cost discipline. If revenue growth slows, and it will, those profit margins are going to compress rapidly. The market is pricing Reddit like it's going to maintain 68% revenue growth forever. That's impossible. Let me tell you about the competitive landscape, because Reddit is not operating in a vacuum. Every social media platform is fighting for the same users and the same advertising dollars, and Reddit is losing that fight. Meta has Facebook, Instagram, WhatsApp, and Threads. They have nearly 4 billion users across their platforms. Google has YouTube, which is the dominant video platform. TikTok has the youngest, most engaged user base in the world. What does Reddit have? Forums, discussion boards. That's it. They're competing in the social media space with a product that looks like it was designed in 2005. Reddit's average revenue per user is $5.04. That's pathetically low compared to Meta's ARPU of over $40. Reddit is generating a fraction of the revenue per user compared to its competitors. Why? Because their targeting capabilities are inferior, because their ad formats are less engaging, because advertisers don't see Reddit as a premium platform. Here's another massive risk nobody's talking about: content moderation. Reddit relies on volunteer moderators to keep the platform functional. In 2023, 3,000 Reddit communities went dark overnight to protest company policies. 3,000! What happens when moderators get angry again? The platform falls apart. That's an existential risk that could destroy the company overnight. Reddit also faces regulatory risks heading into 2026. Governments around the world are cracking down on social media platforms for misinformation, harmful content, and data privacy violations. Reddit has historically been a Wild West platform with minimal moderation. As regulators tighten the screws, Reddit is going to face massive compliance costs and potential fines. The macroeconomic environment is also deteriorating. Reddit management admitted there's low visibility heading into 2026. Tariffs are on the minds of advertisers. Recession fears are growing. When the economy slows down, advertising budgets get slashed. And Reddit, with its almost total dependence on advertising revenue, is going to get crushed. This is not the time to be buying a high multiple advertising dependent stock heading into an uncertain economic environment. So what should you do if you own Reddit stock right now? Sell, take your profits and get out. I don't care if the stock has been going up. I don't care if you think you're going to miss out on more gains. At these valuations, the risk reward is completely upside down. If you don't own Reddit stock, do not buy it. Wait for a massive correction. Wait for the PE ratio to come down to something reasonable, like 20 to 30 times earnings. Wait for the company to prove it can diversify its revenue beyond advertising. Wait for real competitive advantages to emerge. None of those things exist today. Here's my rule. I never pay more than 25 times earnings for a stock unless it has an unassailable competitive moat. Reddit doesn't have a moat. Users can leave Reddit and go to Discord, Twitter, or any other platform tomorrow. There's no switching cost. There's no network effect that locks users in. This is a commoditized platform with no pricing power and no competitive advantage. Smart investors follow the numbers, not the hype, and the numbers on Reddit are screaming danger. This is a stock trading at more than double its intrinsic value, dependent on a single revenue stream, facing existential threats from AI, and heading into an uncertain economic environment. That's not an investment. That's a gamble. I've made my fortune by knowing when to walk away. Reddit stock at these valuations is a walk away. You want to make money in the stock market? Find companies trading below intrinsic value with durable competitive advantages and multiple revenue streams. Reddit has none of those characteristics. The market has priced in perfection, and perfection never lasts. Don't be the investor holding the bag when this stock comes back to earth. Protect your capital. That's how you build real wealth. Now go make smart decisions.